Welcome to Living Your Greatness. Each episode, we bring on great people to inspire you to achieve your greatness. We discuss topics all related to health and wellness. Listen to world-class stories, learn valuable lessons, and turn knowledge into action. It is now time for you to unlock your inner greatness. Hello, everyone, and welcome back to another episode of Living Your Greatness. This is your host, Ben Mummy, and today we have a new guest to the show, and his name is Chris Vermeulen. So for those of you who don't know Chris, he's the founder of the Technical Traders. Chris has been involved in the market since 1997. He is an internationally recognized technical analyst, trader, and author. After years of research, trading, and helping individual traders worldwide have taught him that many traders have great trading ideas, but they lack one thing. As a result, they struggle to execute trades systematically for consistent results. Chris helps educate traders, and his mission is to help his clients boost their trading performance while reducing market exposure and portfolio volatility. Chris has also appeared on Futures Magazine, Gold Eagle, Safe Haven, The Street, Kitco News, Financial Sense, Dick Davis Investment Digest, and dozens of other financial websites. So Chris, welcome to the show. It is a pleasure to have you on.
Hey, thanks for having me, Ben. Always a pleasure. I'll have to cut that bio down. It's a tongue twister to say out loud.
Absolutely. So Chris, tell us a little bit about yourself. Where did you spend your formative years growing up in Canada? What led you to a career as a technical trader? And how and when did you start up the Technical Traders?
Sure. Yeah. So I got kind of hooked on the stock market with a little booklet it was from Larry Williams, which if you're in the trading industry, he's kind of like the godfather of commodities futures trading. Anyways, a little booklet arrived in the mail from my dad when I was 16, and it was talking about how you could make millions trading futures. I mean, you're not allowed to write marketing material like that in the financial industry anymore, but it got me hooked. I was like, Dad, let's trade futures together. And he looked at it, he's like, no way we're trading any of that stuff. But I read that little booklet probably 6 or 7 times. And I was convinced I wanted to start trading. And lo and behold, in business class in high school we were doing a stock market competition. Like it happened like a couple of weeks after that thing arrived in the mail. And I was like, oh my gosh, this is so exciting. I get to like actually play in the stock market. So our class had to compete against other classes across Canada. And we turned $100,000 into like $280,000, something like that in a one semester. And that was it. I was hooked. I'm like, this is absolutely amazing to make $180,000 in a couple of months, few months. And you don't really have to do anything. that was like, I'm addicted. So I really just started learning everything about trading when I was 16 years old. It started in high school. I carried it over to college. I turned 18. My dad co-signed for me. You have to be 18 to open a trading account. So he co-signed and I started trading. And that was back in 97. And more or less, I started trading through college, and I paid enough in the last year, or traded enough, that I was able to pay for the last year of college tuition, residence, books. And I was starting to teach my roommate and their friends and stuff. And so that's when I started teaching people. I'm like, not that I really knew a whole lot back then. I was definitely very green, but that was when I started realizing that this is what I really wanted to do. I really like teaching people. I like explaining and showing people how things work and why they're moving. And so that's how I got into it. So I've been doing it for like 24 years. And I live and breathe it. I love it. To me, it is the video game of a lifetime. And you are the casino. The more you know, the better the house odds you have. And that's how I just got hooked into it. And I love it. I love helping and I love trading. I've always been a bit of I'm not a high risk gambler, but I love gambling. I love blackjack and I love poker. I used to build custom poker tables and ship them around United States and Canada. I used to run my own poker club. I love game of skill. I consider poker a game of skill, and it's a rush. Stock market is the exact same. So when online poker in Canada got banned, that was when the stock market really came front and center even more. So I think it was in 2009. I think that happened. And that's when I really piled into the stock market in a big way, because I'm like, this is going to be my fix. and I just love it. And that's where I made a ton of money during the market crash in 2008, 2009, 2011, and big rally there. So I love the markets, and that's kind of what I do.
Awesome. Great, Chris. Thanks for sharing that background of who you are and kind of how things kind of shaped. So moving into a different direction now, Chris, last month, the great Warren Buffett and Charlie Munger spoke at the 2021 annual Berkshire Hathaway shareholders meeting. After Buffett concludes his statements on inflation and how hot it is running, Charlie Munger blurts out, "Yeah, and there's only one very intelligent man who thinks this is very dangerous." And that's just the start. It is clear to the public now that the rate of monetary inflation has gone crazy. A lot of money has been printed and prices continue to go up. Jerome Powell, chairman of the Federal Reserve, has predicted that this price inflation is transitory. So Chris, what is your opinion? Do you believe inflation will continue to rise?
Yeah, so I don't really follow it too much, but I think we all see inflation in the stuff that we buy. I mean, well, maybe the inflation numbers aren't really showing much inflation. I mean, we're all seeing it ridiculous rates. I mean, I'm big into 3D printing, and 3D printing materials have doubled in price. Like, I mean, it's crazy. Groceries are through the roof. Gasoline prices are through the roof, at least where we are. It makes, not a whole lot of sense. Everything you want to buy is sold out. You can't get it. So everybody jacks the price up because they only have a few left and they're not getting more. So they got to make their money. I mean, it's brutal. The inflation is just insane. We went from, lumber used to be super cheap, and then it spiked through the roof. I mean, it went from, I think, $250 on the futures chart to $1,800 in only a few months. Like, it's crashed 50% since then, but we're definitely seeing, to me, inflation, because everything we need costs a lot more than it did a year and a half ago. And I think it could be here to stay for a while. I think it's going to take a long time for the world to catch up with the supply issue. Everybody wants stuff. People aren't going anywhere because they can't really travel still. And so they're buying everything. Everyone's buying their own. I mean, it's all about staycations. People used to talk about it years ago. It's save money and do a staycation, stay at home. But now it's like forced staycation. So the whole world wants to buy stuff for their home and their yard and for entertainment. And of course, with the lockdown of factories shutting down, there's more demand than ever. They weren't prepared for it, but then they had to cut production. And so I think it could take another year or so for this to hopefully, for the markets to catch up, the factories to catch up. And eventually, when there's a glut of everything, we'll start to see prices come back down. So it sucks that everything's expensive and hard to get.
Absolutely. Thanks for sharing those insights, Chris. Eric Sprott, a Canadian billionaire and the founder of Sprott Inc., has mentioned you are one of his favorite technical analysts out there. There are a lot of technical traders out there. Why do you think Eric Sprott values your work? And how do you think you earn respect from a well-established industry leader in precious metals?
Yeah, I would like to think I became his favorite technical analyst because I'm a fellow Canadian, and I've been doing this for a long time. He's been a subscriber of mine for years, following my stuff. So he knows, my analysis has got zero bias. So many traders and analysts are biased. They always draw their analysis to go to where they want it to go. But I pretty much just say how it is. This is what the chart is saying. I don't care if you don't like Bitcoin going from 60,000 to 11,000 potentially. That's what the chart is pointing to. And I just say it how it is. And I mean, I've got a track record. He's followed me for many years, and I cover precious metals, which is his favorite type of thing, gold, silver, miners. So we just kind of naturally connected that way. And that's probably it. I mean, I'm just a straight shooter and follow the analysis and follow the charts, and the money should follow. So.
Okay, great. So how will monetary inflation affect the value of the US dollar in the longer term?
I think the US dollar could struggle here. I mean, I think it's oversold. It's having a really nice bounce over the last week or so, which is putting pressure on commodities. We've seen commodities really sell off, especially precious metals. But the amount of printing going on, it's going to naturally have a devaluation effect for the US dollar. Now, if for some reason the rates start to go up, higher rates will actually increase a currency's value, because if that currency's paying a higher interest rate, people are going to move from other currencies that don't pay as good of a rate and move to the currency that is paying a higher rate. So it's going to be this kind of yin and yang. There's kind of printing is trying to pull it down. And then if they say they're going to raise rates twice over the next year or two, that's kind of a bullish sign for the dollar, which is why I think we've seen the dollar pop. There's a couple reasons for the dollar popping. It was at a multi-year support level. It was oversold. The chart was pointing to a big relief pop, but then the Fed talked about, interest rates. And of course it got people excited and it popped the price of the dollar up. So I think there's going to be some pressure on the dollar. And when you look at the dollar monthly chart, several months from now, if we start to break the lows on that monthly chart, it's going to be a huge devaluation in the dollar. It's going to go from like 93 cents or whatever you want to call it there, down to potentially like 80. So whatever percentage that is, it's a huge potential drop. And that's what could spark the mega kind of commodity super cycle where precious metals and miners really take off. So I think it's on the cusp of happening. Big moves like this, multi-year patterns take years to unfold. Everyone wants them to happen like, 2 months ago with the short squeeze and everybody trying to make that happen. But the market works on its own time frame. These are huge chart patterns. You can't just move a massive market by creating a bunch of hype and getting a bunch of people excited, because it's just hype and it fizzles out within a day or two usually. So you just got to let these markets play out and see. But the dollar's in for a pretty good potential decline down the road.
So Chris, this actually leads me to my next question. Goldman Sachs, a leading global investment banking, securities, and investment firm, believes that a commodity supercycle is on its way. Right now, would you say that the commodities market is gaining traction?
I think so. I did a presentation back in October talking about this new commodity super cycle that could last 5 to 7, maybe even 10 years. We saw it happen back in when the last commodity cycle started, really around 2001, 2002. It was when it was kind of in the infancy stage, and they were just super undervalued. We kind of hit that undervalued commodity mark about 6-8 months ago, where commodities were way undervalued compared to everything else. Everyone was into the stock market. Everyone was into real estate. The same thing that happened back in the 2001 kind of market top, when everyone was just, no one cared about commodities. No one cared about gold. And then eventually the tides changed. And then we saw this rise of a super cycle in precious metals. And I think we're in that stage now. I think it actually started more or less in 2019. Gold broke into a new bull market as kind of the global safe haven or defensive play about for currency devaluation. And now we're just starting to see the miners come to life late last year, and silver. So I think there's still another 3 or 4 years of upside in precious metals. And typically it's the last like 10% of a trend is where you get some of the biggest gains or the biggest losses. So, the market could grind higher for a couple of years, but then you just see a parabolic spike in prices. Everyone piles in, they get excited, it becomes mainstream. So that's usually the sign when you need to know you need to start taking profits, when you get those parabolic moves. But we're far from that. I think commodities are going to do well for several years, and it's going to be a slow burn higher, but it's going to be very profitable.
So Chris, could you please explain what you believe affects the move in the price of equities and bonds? Is it more news-driven events versus investor sentiment versus the technical picture versus seasonality of asset classes, or other?
Yeah, so it can be all of those at different times, but the real mover behind the market, in my opinion, is market sentiment. What do investors and traders feel? Because the stock market is the price chart is an image of what people were thinking and feeling during those times. When price of something is rocketing higher, everyone's excited. They think it's the best thing. They want to own it. They think the company's going to do well, or it's just going to continue to go higher. When it starts to sell off or go sideways, that's people are like, they're not sure about it anymore. And they take a pause or a breather. So the real sentiment, and typically sentiment, it goes in waves where you'll see a big push in price, and then you'll see people get kind of bored of it for a little while, and then they'll get excited about it and it'll start another rally. And that's how you get like patterns on the chart, like a bull flag pattern or a bear flag pattern. these different patterns. Now, you can have news that moves the market, and news is usually a short-lived type of move. So, for example, the short squeeze that was earlier this year when everyone wanted to squeeze silver higher, we saw silver have a really strong pop. It went mainstream media, across the web, on TV, radio shows for like 2 or 3 days. We saw silver pop, and then it completely fizzled out and drop. And so the markets, the news can definitely move the markets. But whatever that move is, if it's against the underlying trend, it'll get wiped right back out pretty quickly within a couple of days. If it is with the trend, it's still going to actually give back most of those gains because it's pushing price beyond a sustainable level. People aren't actually willing to continue paying those prices. It's just a wave of people all fighting for it at that moment. And so they drive the price up. And as soon as that demand fizzles out, which people get bored very quickly, price just naturally is like elastic. It comes back to where there's an equal amount of buyers and sellers comfortable at the market value. So there's lots of different ways. Seasonality is another one. You will see different commodities move at different times of the year. Same with the stock market. You get the holiday rally like November, December. There are lots of these things that come into effect, but really it comes down to, I analyze the charts because if I follow what the charts are saying, that's telling me what the feelings of the emotions of investors and traders are doing and feeling. So I just follow that tide. And usually people feel the same about something for a long time. People don't just change their decision right away and go from loving something to hating something. So the charts give you that kind of guidance, and you can tell some chart patterns when people are starting to give up on something, they're unsure, they're getting nervous. You can read all that off the charts.
So Chris, this brings me to my next question. Is there a risk that the broader equity markets could correct or collapse soon? If we do have a market adjustment or crash in the upcoming year, how would this affect the price of gold and silver metals and the corresponding miners?
Right. So, I mean, there's always the risk of the market having a correction. I think it can fall 10 to 15% at any time. I mean, the market is kind of primed and ready for that to happen. Now, with that said, the market always feels like it's ready for 10 to 15% correction, unless we just had one. The market climbs a wall of worry. And we are seeing that in the charts right now. Every day, the last half an hour of the session or the last hour, we keep seeing big volume sellers step in. I think there's a lot of people betting against this market because people think this market is ready to crash and they're worried. And the market loves to keep climbing and going higher and higher. And every day near the closing bell, it looks like big players are like taking on big short positions or averaging up or averaging down, however you want to say it, for a short position. They keep adding to it, hoping that the market's going to eventually have that collapse. And today's Friday. It's going to be interesting to see what the close is for the week, because I find a weekly close is a really good sign of the longer term position traders, how they feel about their positions. And shorts don't want to hold a short position over the weekend, because if there's good news, they're going to get slaughtered at the open on Monday. So the shorts typically cover if they're wrong on a Friday late day. So it'll be interesting to see how that plays out. So I think if the market does have a correction, which eventually it will, depending how it crashes, is going to play differently on precious metals. So if there is a very sharp crash, we see a 8, 10%, 15% crash, and it's on high volume and it happens very quickly, whether it's news driven or whatever happens, gold and silver and miners will crash with it. They pretty much always do. When there's true panic in the stock market, people liquidate everything. Not only that, but most people are forced to liquidate because everyone over leverages themselves. And when things start to sell down, the broker says, hey, you'll get a pop-up on your screen saying you're over leveraged. There's a margin call. We have to close a position, or you need to close positions by the end of the day. And so all this liquidation happens during a very sharp crash. And that kind of spurs on the crash even further. And that's what pulls precious metals and miners down, is pure panic, forced liquidation. But if the stock market trades sideways and slowly drifts sideways and downwards over several weeks, and it corrects 10 or 15%, gold and silver can actually rally very strongly. They can become the market leaders and outperform dramatically. We see this happen all the time. And that's what I'm looking for now, is when the stock market goes dormant and we see gold, silver, and miners start to just keep chugging higher and higher and higher. That to me is an early warning sign that there actually could be a bigger correction coming. But they can do very well when the stock market goes sideways or lower. It just depends if it's panic or if it's just kind of people rotating out of stocks and moving to different asset classes, and it's driving the market lower.
What indicators and signals do you follow to track volatility? Would it be price action, the US dollar, bond rates, the gold silver ratio, or a combination of a few indicators?
Yeah, volatility, there's a few different ways you can look at volatility. And I look at kind of two types of volatility in general. I look at the VIX, the volatility index, that kind of tells us what the average investor is, their fear level. When the VIX is high, they say it's time to buy. So when there's a lot of fear in the market, that's when you want to buy. The VIX will be spiking. When the VIX is low, it's time to go. So when the VIX is bouncing on bottom, just keeps grinding lower and lower, that's a point where you're like, you know what, I should maybe be looking to pull some money off the table or bringing my protective stop higher so that when it does eventually have a quick drop and collapse, I'll be able to lock in more gains. So the volatility index is good for that. The other type of volatility I look at is just price action on the chart. For example, if there's big intraday swings, sometimes volatility can be relatively low, the VIX, but we have big intraday price swings from the highs to the lows. And so I call that just kind of price volatility. Some commodities and stocks move very quickly. They chop around on the chart. Even though it's low VIX volatility, that asset has got a high relative volatility. It could be moving 3 or 4% a day. And that's a lot more than an index that moves a quarter or 0.5% a day. So you kind of got to look at each individual asset that you're looking to trade and just look at the price range of the daily chart over, look back a year and how big is the normal range. And then when it gets beyond that, it's in a high volatility. There's a lot of momentum. You need to take that into account for figuring out where your profit targets are going to be, where your protective stop's going to be. That's kind of how I typically look at it in terms of volatility.
So Chris, right now, where does the smart money appear to be going? Utilities, bonds, physical metals?
This year has been a really kind of choppy year. If you look at the NASDAQ, it's almost been going sideways, kind of grinding its way up in this big oscillation, just kind of making a nominal new high and then selling off in a big way and then rallying up again, making a nominal new high. And it's really been a year of sector rotation. So last year, there were some sectors like technology, biotech, healthcare, clean energy, the electrical vehicle market. There's been some sectors that have just gone up hundreds of percent. Well, they fell out of favor more or less in January. And, we're kind of looking for where the new leaders are. And right now we're starting to see like oil energy sector come to life, retail's coming to life, real estate. There's some of these sectors are coming back to life, but they haven't really been leading or muscling their way higher in any real significant way. The markets has just been chopping. I think investors and traders right now, they don't know where to really dump their money, and no one's excited about a particular sector like they were last year, where everyone just piled into 5 different sectors and they just kept dumping money into them. We don't have that this year. No one's thrilled about anything. And the new stimulus plans talking about, all this road work and stuff. Well, that doesn't get the average trader excited really, because it means, we're buying Caterpillar, we're buying industrial companies. And the problem is, it's not a problem. The reality is most traders driving this market, there's so many, like tens of millions of new short-term kind of millennial traders or, Robinhood type traders in there, that this type of news does not excite them at all. They're not excited to go out and buy these type of companies. They want the high flyers, the fast movers, and stuff in the media. And we haven't had any of that this year, really, not much. So this year has been a tough year. Where's the leadership? I think it's the energy sector. We're seeing both oil energy do really well, and in the green energy, it looks like it's just starting to come back to life going forward. So we just really need to see this market. What people need to understand is the stock market goes in waves. So we saw a rally from the 2020 crash. We saw a rally up from those lows, and then the stock market traded sideways for a couple months. And that's because the markets got exhausted and people didn't know where to put their money for the next push higher. And then they went back into the same sectors and we saw another rally. And then this year we've seen the stock market trading sideways because people don't know where to dump their money. And right now we're just waiting to see where those next leaders are really going to be. And at this point, it looks like the energy sector is kind of leading that way up.
Chris, something that's really impressed me, and I think as well as a lot of other listeners who are listening, is you are known for taking your emotions out of play when making investment decisions. In fact, a couple of weeks ago on Kiko News, you went into cash awaiting a drawdown in equities, Bitcoin, and gold. You had explained to David Lynn that the stock market cycle and intermarket analysts were giving a neutral mixed signal, meaning it was not favorable to be in stocks. Instead of participating in the roller coaster ride, you decided to step aside. So could you please share with our listeners, when do you plan on coming back into the market? Also, where do you see the most opportunity and the puck moving next?
Sure. Yeah. So the stock market to me is in one of two phases always. It's either favorable, you want to own stocks, or it's not favorable and there's no point of being in the stock market. You can move to cash, or you can trade something that goes up in value while the stock market meanders around or potentially corrects, which and a good play for that is actually the bond market, if bonds are acting as a safe haven, which they don't always do. So when I talked to David, then we had been in cash, and that was because the stock market didn't really know what to do. It was drifting around. We got back into the market on the 18th of this month. And right after a sell-off, it hit a critical level. All the internals were telling us, hey, this stock market has just turned a corner. The momentum is shifting to the upside. And we've seen a really nice pop off that price. Markets, all of our trades are positive. We've been taking profit targets already, which is pretty exciting. And I think the upside right now is to be in equities in general. Go look for your favorite stocks in the leading sectors, potentially energy, technologies coming back to life, maybe retail. And that's where I think this next wave of money is going to be flowing. So we're back long. And it's funny because as soon as we go to cash, all I hear is people saying like, you've got to be in stocks. Why are you not in stocks? And then I go long and everybody's like, we should be shorting. We should be shorting. This is about to top out. It's funny how if you can separate the emotions and just go strictly analytical, follow the charts, follow a strategy that's proven, you're going to realize like you're always fighting the trend, the herd mentality. As soon as I want to do something, all I get is kickback. Like, I'm excited we're going to go long. And everybody's like, why are we going long here? And, we moved to cash and everybody's like, this is crazy. Why are we moving to cash? But I mean, in the long run, if you just follow the strategy, take your emotions out, you're going to realize it's a very, very slow moving market. I focus on the most efficient strategies I think available. We do the least amount of trades with the lowest drawdown, a fraction of the SP 500, and we crush the SP 500 in the NASDAQ returns. So the problem is I trade very conservatively, but with a very efficient strategy. So we do well, but it bores the heck out of most people. People want action. They want to have their blood pumping, like when you got a good hand in poker, right? Who doesn't love that feeling? But I'll tell you, it's not fun when you lose real money on that type of stuff. So that's kind of how I focus on trading. You got to really step back and separate the emotions, and who cares what everyone thinks? If everyone wants to go in one direction, to me, it's like a golden sign. I've got my own secret indicator, which is my email inbox. And I can tell when a commodity or a sector or index or something is topping because the emails start flowing. I'll make comments in my commentary in the morning to members or in an afternoon update. And I can tell, I can plant specific comments in there and I'll get a wave of reaction back. And I can tell right away what the general public is thinking and feeling, because I've got this kind of secret indicator of thousands of people telling me, like, who are, in the markets, on the streets, telling me how they think and feel. And it really gives you a good idea of how people are thinking and feeling. And if you know that, a good probability of where price is going.
Thanks for kind of dissecting that there, Chris, because I did feel that there must have been a greater reason why you were doing that. So it was nice to get that detailed explanation.
Yeah.
So Chris, can you comment on where you see gold and silver price landing by year end?
That's a tough call. Where are we now? We are June, almost July. So I think we could be back up near the $2,000 an ounce US, $2,000 gold. I think we could be bouncing up there, maybe even threatening a breakout, which seems to work with the cycles, the patterns at play. I think there's still a lot of work to be done to get there. Now it could go sooner than that, but that to me is kind of a logical, you measure out the moves. That's kind of where price and time should take us, would be a breakout there. And if gold and silver are taking off, that means we're probably getting into some tough times in the stocks. Stocks could be struggling more. There could be more bad news coming on the horizon. I mean, a lot of people want to see like $5,000 and $25,000 gold and, $400 silver. And while it'd be nice, the reality is if we hit those levels, sure, we might make some money with our gold and silver and our miners, but the reality is our lifestyle will probably be brutal. We'll have a terrible economy. Currencies are collapsing. Companies and countries are going bankrupt. I mean, crazy high precious metals prices to me is a scary sign that bad things are coming. So I'd rather them just slowly grind their way higher, something sustainable. We can make money. I don't want to see them just go ballistic, because that means the rest of the world's falling apart and everyone's moving to a physical asset, a physical currency, which I see as gold and silver. So 2,000 by the end of the year, I think, is totally doable, if not higher. But we don't need $25,000 gold or really want it.
What will it take for the physical metals to break out?
Yeah, the physical metals is going to be, I think, US dollar driven. I think we touched on this earlier. I think when you look at the monthly chart of the US dollar, when it breaks down, potentially in a couple months, that is when precious metals are going to pop and take off. And depending how quick and how precipitous that US dollar collapse is, was going to send metals skyrocketing higher. I think there's potential if the dollar breaks down on that chart. I mean, it's a monthly chart. It's a big picture. Probably wouldn't unfold till really next year, but when it does break down, and each little bar is 1 month, so we need a bunch of these bars to happen. I think we could see precious metals really take off. I think gold could go to 2,400 or 3,400 pretty quickly when that happens, because that'll be a pretty major event. And there's going to be currencies having such huge swings. It's going to change businesses. I mean, when currencies change, it really can affect large multinational corporations. If the US dollar is really high, a lot of people in other countries can't afford all these multinational services because they're based in US dollars. When the dollar goes low, they actually do killer sales. But reality is a dollar is not still worth the same dollar it used to be. But currency swings, big ones, are going to create a huge ripple effect in different sectors and currencies and in market caps. Mega market caps some will struggle, some will thrive, depending on what side of the equation they're on for currencies.
Which leaders in precious metals do you respect the most? Where do you suggest that millennial investors like myself go to better educate themselves before making any investment decisions?
That's a good call, or a good question. I don't know. I really stopped watching the news. I stopped following people probably 7 or 8 years ago, because eventually I'm like, well, why did I get sucked into that analysis and do that? I have a different analysis. I've realized now that I'm way better just to dance to my own music. I do my own charting. I do my own stuff. I know exactly what to expect. I know why things should be going to where they are. So I really kind of cut everyone off. Who you'd look at really is going to cater down to the type of individual you are. You're looking for short-term hundreds of % return in penny stocks for miners, like micro caps? Are you looking to invest in precious metals with ETFs or buy physical metals? Are you looking for that long-term horizon? So it's really going to vary. I mean, if you want, not to plug myself, but I provide all those analysis points every morning with subscribers. I recap on it. This is what we're expecting today, over the next couple of weeks, looking forward to the end of the year. And here's the major super cycle of where things should be going and how long these turning points should take. So I provide that whole spectrum. And that's why a lot of subscribers are addicted to my morning video. Literally, if I'm a few minutes late, people are like, I need your video. Like, I'm waiting for my coffee here. It's my morning coffee. And I recap on all the markets and intermarket analysis of why things are moving. I mean, I think there's a lot of different sites out there that get into fundamentals. If you want to get into individual companies and get fundamental, then I don't know who you'd go to, because I don't follow that stuff. But you'd want to go find somebody who does really good research, proven track record. If you're going for just trying to make money and follow price action, and you don't really care what the company does, you just want to make money when the trend's up and get out when it's not, that's pretty much what I cover and what I do. So Yeah.
So you have helped over 40,000 people find profitable trades in the stock market. More importantly, you are passionate about teaching others how to trade. What is your motivation for helping people? It seems like there's a greater purpose behind everything that you do.
I mean, genuinely, I'm just a really nice guy. It feels good to help people. I think most people have experienced that. When you help somebody fix something or help them move something or whatever it is, donate your time to help. I mean, it just naturally feels good. It releases chemicals. It just feels really good to help people. When you see other people smile or laugh and you laugh with them. And I mean, there's just something about it. And it feels really rewarding to help somebody get over a hump and figure something out. When you see that aha spark in their eye, that moment, they're like, oh man, nobody's ever explained it like that. I totally get it now. And I mean, there's just something that feels good with helping people, right? So I've just always kind of been like that. I like to create things, and I find trying to help people is kind of it's very creative, because you need to, as you're talking to them, you can pick up on their body gestures and what they're saying of what are they kind of, how does their brain work? Are they audio? Like, do they need to listen? Do they need to do a hands-on? Do I need to show them what I'm talking about, or what path do I need to go? And so it's kind of just a giant game of how can I help this person figure it out? And then hopefully by the end of the conversation, they're, or the event or whatever it is we're doing, they're happy and you can move forward. But it just feels good to help people. And I mean, I was lucky that I had a lot of financial success really early on in life. And I kind of want to give back that way. I want to help others because I mean, life can be a real struggle if you've got financial concerns and you're struggling. And I've found ways to kind of be able to make life a little easier and create opportunities. And so that's kind of just part of who I am. I just like to help people.
That's great. Something that I admire about you is you're more than a technical trader. You are a father of 2 kids, you are a husband, and you have other life goals, desires, and passions. You have recently shared with me that you are in the process of launching a new business called URLY Start to help kids, youth, and parents become highly successful entrepreneurs. Can you please provide more information on URLY Start? Also, why is this project so important to you?
Sure. Yeah. So we call it the Early Start Program. So more or less, I want to kind of try and give back and help kids, students, youth, really anyone who's looking to take control of their life, become an entrepreneur, and start their own business around something that they love to do, or potentially that they're really good at, and they want to move that forward. And so the whole reason of this early start is I'm trying to focus on young kids because they've got their whole life ahead of them. I ran a lot of different businesses when I was in school and college, and through those processes completely opened the doors for I could do anything down the road when I wanted to. So the Early Start Program it's learning to build an online business, and which is why it's called Early, URL, like an Earl. And more or less, we're just teaching kids how to become an entrepreneur, how to be independent. And the whole process, the benefits of kids getting early exposure to entrepreneurship is it builds confidence. They're creative. They can build anything they want. The sky's the limit. And so we're providing this kind of framework that if you're a young kid, ages 8 to 12, we've got this instant business success plan where in 60 minutes, they can build an online business, a website and everything, landing page, opt-in form. It's so cool. It's drag and drop. And they can literally start selling anything they want. If they want to bake dog cookies, which my daughter did, we built a website and she bakes dog cookies. She puts it on her social media just for local pickup only. And she posts stuff and she sells stuff all the time. And now she's got her friends. She's teaching her friends how to build websites. And it's just amazing to see the spark and the excitement in the kids. My daughter, when she gets a new order online, she runs down to my office. She's like, look at this, Dad. I mean, she sold some cookies to Idaho and California and to Toronto, and she still ships stuff, but she's blown away with it. And now she's emailing people, and it's just a priceless experience. I grew up, both my parents were entrepreneurs. So I got the taste of licking and sticking thousands of envelopes. I know the hours that go into running a business and the stress that can come with it. And it got me hooked. And my parents were very successful. And I'm like, well, that's what I want to do. I want to be able to be successful and travel and I have been. And so now I want to give back. I want other kids and families to go through this. They can build these 60-minute businesses together, or you can take the early mastery program, which is what I've done. And I've built an 8-figure business. I've built dozens of 6, 7-figure businesses. And this early start program is really cool because we are launching it as a crowdfunding on Kickstarter, and people who get involved get to follow along. We are building, not only do you get the whole strategy, everything we're doing, but we're building $1 million business from scratch in an industry we have no exposure to. And we're sharing it and doing it live with everyone on board. So they get real experience and can see what we're teaching go live as we do it step by step. So it's really exciting. It's going to be life-changing for anyone who takes it. And you're going to be able to walk away and build either a tiny little business for your kids and have a blast, or build a multi-million-dollar business of your own, or that the whole family you can run together, right? So we're trying to just bring family, parents closer together, because the bond that I have with my daughter with this, we see business and light, everything at a totally different angle. We have a blast together. And she just looks at me sometimes when we're out doing something and she's like, we could sell that, or she gets super excited with any opportunity now. So it's just always been my passion, is to help others. And now I want to help kids and go to schools and universities and show them that there's ways to become really successful doing what you love. And it really you just have to put in the time. We don't use any paid marketing tactics. This is pure guerrilla marketing, how to build a real online business that has real traffic that comes in the door forever. And I mean, you're helping, your product and service has to help people. That's the whole thing. You got to help them get over whatever their issue is. Yeah, that's the process.
I can truly feel your passion and your energy. So that's great. I'm really happy to hear about that, and
thank you.
And can't wait to see it kick off. So Chris, who is a future guest that you would like to see on this show?
A future guest? I don't know. I listened to one of your talks there of the Olympic swimmer. And I mean, I listen to stuff on trading all the time. So I really like to see that talk that you had was really connecting, because what a professional athlete has in terms of motivation and guidance and determination, the grit of just the dedication required for success, which you need in any business or anything, any goal you want to achieve that's really great. You need all those things. And when you and him had that conversation, in my head, I was just like, wow, this is like, it doesn't matter if you're in sports or if you're in business, it's still the same grit. You're an entrepreneur, but you're doing it in a physical way versus building a business, but it's the same mindset, the same passion. So I like random talks. I literally will open up TEDx and just let one random play. And sometimes I look at them like, oh, I don't want to listen to this, but then I listen to it because it's only 12 to 18 minutes of potentially not interesting stuff. But the ones that I don't want to listen to are the ones I find the most interesting and I learn. So I love how you go about it with a kind of a somewhat of a random different people in different industries. That's what I like, is I like to be surprised, because I always learn something from somebody in an industry doing something I've never heard of. And it just creates that spark. So I would just say, go find some more unique individuals, highly successful, and just keep spreading the word.
Thanks, Chris. Where can our listeners go to connect with you and follow your work?
Sure. They can go to thetechnicaltraders.com. And if they go there, they can see sample videos. We got a blog with daily commentary and updates. And pretty much every morning I do a video for subscribers. They can follow along. They can learn technical analysis while I'm showing it. And we all trade the same stuff together. So we get into these trades. We manage the positions together. It's a lot of fun. It's educational. There's a good group of us. We do a monthly mentoring session, which we just did yesterday, where all the members get on and we all just kind of talk and go over the markets and talk strategies and emotions, because most people are very emotional, and it's all about trying to eliminate it. So yeah, that's where they can go.
Okay, great, Chris. I will make sure to add that to the podcast notes. And again, Chris, I want to take the time to really thank you for being on the show today. I think you've added a lot of value to anyone that's been listening. You've been very generous with your time, and I look forward to having you back on the show.
Sure. That sounds great. Well, I really appreciate being on here. It's been a great talk, and looking forward to another one for sure.
This podcast is for informational purposes only and is not to be considered personal, legal, or investment advice or a recommendation to buy or sell securities or any other product. It is based on opinions, current events, press releases, and interviews, but is not infallible. It may contain errors, and Living Your Greatness offers no inferred or explicit warranty as to the accuracy of the information presented. If personal advice is needed, consult a qualified legal, tax, or investment professional. Do not base any investment decision on the information contained on Living Your Greatness or our videos. Thank you for listening to the Living Your Greatness podcast. If this show has added value, please subscribe, leave a rating, and make a review.